Hi everyone, I'm Ricardo Gonçalves with On the Money from the SBS Newsroom for this Friday, the 2nd of October 2020. It is your daily 10-minute business and finance news wrap. Later, will there be bargains in store during Christmas and how the share markets will react to the US election? But we had some breaking news late this afternoon. A positive COVID-19 test by the US president. It has hit the share markets both globally and here in Australia. By the close, the S&P ASX 200 fell 1.4%, 5,791 points. For the week, it means our share market declined 2.9%. Today, there was red across the boards. Resource stocks down, BHP off by 3.2%. The banks were also weaker. Westpac off by 2.1%. CSL, Telstra off by 1%. Some made some very small gains. The retailers did okay. Wesfarmers, which owns Bunnings and Woolies, added just 0.1% on the back of some economic numbers, which we'll tell you about in a moment. And Xero, it actually hit a record high, up 0.8%. But the story of the day is that COVID-19 positive test by the US president. For more on that, I spoke earlier with Jessica Amir from Bell Direct. Jessica, how have the markets reacted to the news that Donald Trump has contracted coronavirus?
Well, October, to begin with, is traditionally the ugliest month of them all. So we were dealt with our first big surprise today. The leader of the free world at a high-risk demographic, age 74, was diagnosed with what he's previously dubbed the China virus. So the local market fell to its session lows, losing about 1% just in 2 hours of trade after that announcement came through. US future traders were selling down the US market, betting that the US market would be heavily sold off at the open when it opens later this evening. As for the ASX 200, well, it was already having a negative day, really, as the oil price sank 4% to 38 US, with Madrid and Moscow entering tougher restrictions, all at a time when Libya is pumping out more oil to the market. But after the Trump announcements, markets turned to a sea of red, and the safe haven US dollar saw a bit of a rally. As a result, the AUD fell about 0.5% to 71.41 US. Now, despite the negativity today, Ricardo, we did see some stocks benefiting from the behavioural structural COVID-19 shifts hit all-time highs, like Xero, the cloud accounting company, and Peter Alexander, owner Premier Investments. And that was supported by Aussie retail trade data coming out today for Australia better than expected.
What's this likely to mean for volatility on share markets now, especially leading up to the US election?
Well, Ricardo, today, in fact, the Aussie Volatility Index actually hit a month high, and we're expecting this volatility to continue not only in Australia but for the rest of the world. As we said earlier, October is traditionally the most volatile of months, where the Aussie shares and international share markets have copped their heaviest falls in history. For example, in October, of course, it was the 1987 crash. October 2008, we saw the GFC really take effect. So this October is likely to be bumpy for three key reasons. Of course, you've got the US election, and that's now going to be tainted by the fact that that the leader of the free world does have COVID-19, so that adds a layer of complexity. Secondly, fiscal stimulus is up in the air. And thirdly, COVID cases in Europe and the Northern Hemisphere are spiking, and a concern is that they're heading into winter. So a lot of volatility you would expect to continue.
Jessica Amir there from Bell Direct. Well, while Trump's COVID positive test may have thrown the market a curveball, what typically happens during an election year? The US election, is exactly 1 month away. So for more on that, I spoke earlier with CommSec's Ryan Felsman. Ryan, what happens to shares in an election year?
Since 1928, if you look at the benchmark S&P 500 index, we've seen that index lift in 19 out of 23 presidential elections. And on average, the total return from 1928 to 2016, so the previous election that we had, was around 11.3%.
Does a pandemic or a recession change this?
Well, since 1952, every time that we've seen a technical recession coincide with a share market correction, so the S&P 500 down by 20% or more, we've seen the incumbent president lose office. The only time this hasn't occurred was when Franklin D. Roosevelt was in power after the Great Depression and before World War II. So what we've seen, of course, is history being against President Trump this time round. We saw the S&P 500 fall by 34% between the February 19 highs and the March 23 lows. And of course, the June quarter gross domestic product or economic growth contracted by 31.4% during the June quarter.
What's the best outcome for investors, and why is one candidate better than another?
Well, typically what we've seen since 1950 to 2019 is a situation whereby if we have a Democratic president in power complemented by a Republican Congress, the total return's about 18.3% on average. So that situation typically results in better returns.
Ryan Felsman there from CommSec. Let's take you to retail now. We had some official statistics from the Australian Bureau of Stats. Victoria's stage 4 restrictions have weighed on spending, with retail trade down 4% nationally in August. Still, turnover remains 7.1% higher than a year ago. So for more on that, Sarah Dowling spoke with Paul Zara, the CEO of the Australian Retailers Association.
Paul, today's retail sales figures, they've shown that Victoria is still lagging compared to the rest of the country. Can businesses survive under the current roadmap?
Well, the ABS data has confirmed the impact of the lockdowns in Victoria, because the results across the rest of the nation have been actually quite positive. And we are calling for the Victorian government to open the stores in Victoria as soon as possible, because we are concerned about small business particularly falling over during this period.
So we've seen quite a big surge in online shopping. Is it enough to fill the void?
Well, look, online shopping has done particularly well. We're up 81%, so really pleased to hear that. But of course, it will never fill the void of physical store openings. The majority of sales are still done in a store. So we're keen to ensure that all retailers are open and ready for trading for Christmas.
So we're approaching Christmas. What are you hoping to see out of the budget in the lead up to Christmas?
What we're hoping to hear from the government is anything that's going to actually put cash into people's pockets so they can actually spend money. So anything from personal tax cuts right through to the permanent increase of JobSeeker. So we hope that, we know that the majority of those funds will end up back in the retail economy. We can't have an economic recovery without a retail recovery.
So we're approaching Christmas. Can we expect any discounting to be happening this year from retailers?
Consumers can expect to see great discounts from retailers as they try to increase footfall into their stores after what's been a very long year. So expect some great deals at the stores.
Paul Zara there speaking with Sarah Dowling. Let's move over now to the federal budget, which will be handed down on Tuesday. And we're looking for some support for small businesses. Announced today, though, were 10 small business tax concessions, including the immediate deduction of some startup expenses and some fringe benefit tax exemptions too. Businesses are now looking to Tuesday for more. And one area being speculated is the reintroduction of a loss carryback tax provision. So for more on what that is and what it means, I spoke with David Watkins, tax partner at Deloitte. David, in simple terms, what is a loss carryback regime and how does it work?
A loss carryback regime is a slight tweak on the existing rules that we've got now. So to start with, what we've got at the moment, long-standing practice is tax loss carry forward rules. So if I make a tax loss this year, and I have a taxable profit next year, then what that means is I can carry forward my tax loss from this year, apply it against my taxable profit next year, and I can reduce what would otherwise be my tax payable next year. So a tax loss carryback is a tweak on that. So think of a successful business that's been trading profitably and paying tax over the last couple of years. It's hit the difficult trading conditions this year and perhaps next year as a result of COVID, and it will have a tax loss, let's say, in the 2020 year. Under a tax loss carry back measure, what that business can do is it can take the tax loss from this year and apply it against taxable profits from prior years. So where tax has already been paid on those profits in prior years, a tax loss carry back measure means that the company can get a refund, the business can get a refund of tax that's been paid in prior years. And so, of course, the benefit to that, the benefit to business from that is that it puts cash into the business today to help that business better meet the challenging conditions that it is still facing. Australia did introduce for short period of time back in 2013 a tax loss carryback regime. It was repealed shortly thereafter. But I suppose the benefit of that is that we not only have thought about the concept before, but we've introduced legislation before. So we've got a template that can be reused.
How have other nations around the world used it?
In this COVID effective period, right around the world, a number of countries have introduced this measure with the same objective of trying to put liquidity back into the system. New Zealand, for example, has a tax system very similar to ours. They've introduced this as a temporary measure. The US has introduced a loss carryback measure or tweaked their loss carryback measure. So it is being adopted by a number of countries, and it is one of the measures that the OECD is suggesting that countries should have in their kit bag.
David Watkins there, tax partner at Deloitte. That is On the Money for this Friday, the 2nd of October 2020. And for the week, I'm Ricardo Gonçalves. Follow me on Twitter at Business Ricardo. It's all about the federal budget next.